Good day, Junior Techies. This is Mrs. de Mailon speaking, and today we're going to look at Activity 4, Adjustments and Post-Adjustment Trial Balance. In this activity, however, we are going to look at the adjustments and putting them into the general journal, and then the part B will be the post-adjustment trial balance. So, if we look at Activity 4, they start with giving us a pre-adjustment trial balance. There's the balance sheet section, and then the nominal section, and now we have to look at the adjustments and make adjustments to these figures to get the most accurate income or profit or loss, or income and expenses for the current financial year in order to calculate the most accurate profit or loss for the year. So in this activity, we're going to look at 4.1, entering the adjustments into the general journal. And then in part B, the next video, we will look at posting to the post-adjustment trial balance. So the first one, they say the following adjustments appeared at the financial year end, 31st of October. And they say, number 1, part of a premises has been lent to a tenant since the 1st of February. The rent for October has not yet been received. Note, the tenant undertook repairs to the building. This cost R2,500. As repairs are the responsibility of DEJ traders, this amount must be offset against the amount owing in respect of rent. So we're going to have to first calculate what is the rent due and then minus off the R2,500 so that we can calculate what the tenant must pay us. But most importantly, first of all, we need to know what is my financial year. So our financial year starts on the 1st of November 2021 and it ends on the 31st of October 2022. We've been letting this property since the 1st of February 2022 and October's rent is still outstanding. So the amount that we received is from February to beginning of October. I cannot add October in my calculation because it's not received yet. So from the 1st of February to the beginning of October is 8 months. So it's February, March, April, May, June, July, August, September. We cannot include October, so it's 8 months. So the 66,000 Rand that I get from my pre-adjustment trial balance is for 8 months. So how much is 1 month's worth of rent? So, and I have to now offset the 2,500 Rand on 1 month of rent. So I must minus that off the rent that is still due. So what is 1 month of rent still due? It's the 66,000 Rand divided by 8 months, which is 8,250 Rand per month. So that is still due, the 8,250 Rand. But I must minus off 2,500 Rand for the repairs that the tenant made. So the tenant only needs to pay me 5,720 Rand in cash. So that is what is eventually the balance for accrued income. So, as I said, the repairs must be recorded for us. Okay, so the 2,500 Rand must be recorded in our repairs account. The 8,250 Rand must be recorded as rent. And then what is accrued still owed to us is the 5,720 Rand. So if I look at the adjustment or the general journal entry, I can debit repairs with 2,500 Rand. I debit accrued income of 5,750, and then the total of 8,250 goes into rent. Now, you can also enter this as a 4-line entry. So in other words, you debit repairs with 2,500 Rand because we need to record the expense for the current financial year. Then you can credit accrued income with 2,500, okay, because he does not owe you 2,500 Rand, so it's technically not, it's a minus on accrued income. And then we debit accrued income with 8,250, okay, and get rent income, a credit of 2,000 8,250. So if you want to really then do this, the 5,750 would be the 8,250 that is owed for rent or due for rent, but minus the 2,500 Rand that he paid for repairs already. So I just put it into one combined entry, but you could also split it up, and the split memo is also shown in your memo booklet. So please go to your memo booklet if you want to see the 4-line entry version. I find it easier in my mind just to do the 3 lines. 2.5 must record for repairs. 8,250 was due for rent. The difference between the two is what is still due in cash, in other words, accrued income. Okay, moving on to adjustment number 2. Bank charges of 350 were incorrectly charged to the interest on overdue account. The error must be corrected. The moment you see correction of error, what must we do? We must do our T accounts. So in other words, we have bank charges and interest on overdraft. Both are expenses. We recorded it in interest on overdraft, which was wrong. So we need to fix that by crediting interest on overdraft and debiting bank charges. In other words, minusing it off interest on overdraft and adding it to bank charges. Okay, number 3. Oh, sorry, before we get there. So the general journal entry is to debit, okay, or plus bank charges and credit interest on overdraft, or minusing it from interest on overdraft. Then number 3, a debtor had been declared insolvent. He owed 1,900 Rand. His estate paid 12 cents in the Rand. The amount was received via electronic transfer, however, not recorded in the books yet. So the EFT we would see only where? On our bank statement. So that's maybe why it's not recorded in our books yet, because we only saw it when we got the bank statement. And the rest must be written off as bad debt. So now there's 2 parts of this transaction. The physical cash part, okay, that I need to record in my CRJ, and then the rest that I must be writing off, and the bad debts is general journal, okay. So 12 cents in the Rand means 12 over 100, because there's 100 cents in a Rand, so it's 12%. So 1,900 times 12% is 228 Rand received but not recorded. And this not recorded will go into my CRJ. And it has nothing to do with the general journal. It's a normal CRJ transaction where I will debit bank and credit debtors control. And then what is left over is the 1,900 minus the 228 Rand cash gives me 1,672 Rand bad debts that I need to record. So what is my recording for that? I will debit bad debts and credit debtors control. And as you can see, 3A, there's no entry in the general journal of receipts as it goes to the CRJ. Be very careful, because if you enter this 228 in your general journal, you will be marked negatively because it's a foreign entry. So it has to go to the CRJ, not the general journal. Be very careful there. Okay, so be very, very careful that you note that this is not a general journal entry, but a CRJ entry. Okay, then number 4, no entry was made of an EFT received from a debtor whose account was previously written off. So he's not a debtor anymore, okay? He's already out of our books. So this is just cash that I received. So this is also no entry in the GJ. Why? Because it's a receipt. So and where does receipts go to? Receipts go to the CRJ, okay? So this is not a general journal entry. It will go into debiting bank and crediting bad debts recovered, which is an income. So you'll plus it for bank, and in your nominal section, you'll put bad debts recovered, or in your balance sheet, in your general ledger. Okay. Number 5, a debtor's account was 6 months overdue and he owed us 2,000 Rand. He is charged 15% interest on his overdue account. So calculation, simple interest. So it's the amount owed times the rate over 100 times months over 12. Okay. And therefore we have 2,000 times 15 over 100 times 6 months that we charge him. And that gives us 150 Rand. So this is interest on an overdue account. Yet again, we're going to debit debtors control and we're going to credit interest on overdue debtors. So debiting debtors control, adding to his account, and interest on overdue debtors income must increase of 150 Rand. Then the next transaction, they say the advertising amount includes the cost of social media advertising for 560 Rand, which will only be published online in November at the start of the festive season. So it's past, it will only be published in November, which is next financial year. So this is a prepaid expense. So November is not in our current financial year, as you can see here on our timeline. We start the 1st of November 21, but we end October 22. So November 22 is outside of our financial year. So that is not this financial year's expense. So it's a prepaid expense. So I must minus it off. So you take the amount and you minus it off the prepaid expense. So you will then therefore debit prepaid expenses and credit advertising. Okay, so you will debit prepaid expenses because that's your current asset increasing with 560 Rand, and you will credit your advertising, and that is an expense that is minusing with 560 Rand. So that will be your general journal entry. Then next one, during October 2022, trading stock costing 6,700 Rand was stolen from the premises. A claim was lodged from the insurance company, and the insurance company agreed to pay or to cover 80% of the loss. The payment is expected in November. So because the loss was in October, we have to match the loss with the income, and therefore we have to match it in the current financial year. So even though they're only going to pay it in November, we're going to record it as this year's income because the expense is in this year, matching concept. No? So the loss, what is the loss now? So we have 6,700 Rand times, they will cover 80%. So 5,360 Rand will be cash in November. However, we need to record it as an income for this financial year. And that is our accrued income, therefore. And then the 6,700 Rand minus the 5,360 is the 1,340 loss due to theft, which is an expense account that I'm going to have to add into my ledger. And then remember that the 6,700 Rand must be minused off the stock to balance it out because it's gone. It's not there. So I must minus the total 6,700 Rand off my stock, trading stock account, because it's stolen, it's gone. And it's not in my storeroom anymore, so it can't be on my books anymore. So if I have to enter it then, the loss due to theft is 1,340 Rand because that's just the loss I'm going to have to take. 5,360 Rand is an accrued income from the insurance company. And then trading stock must minus with 6,700 Rand. Now with this, please note that even though the insurance company is paying me out, it has absolutely nothing to do with insurance expense. So it does not influence, okay? It does not influence the insurance expense. Insurance expense is the premiums you pay for the cover. in order to claim for any future damages or losses or whatever. So this is the insurance cover. No? It is separate from claiming. The moment you claim from it, it becomes an income. And that's just a normal income that you offset against the stock that you lost. So it is not, you cannot minus it off the insurance expense because it's two completely different things. So please just make sure that you don't fall into that trap. So it's not insurance expense that you minus off, because the insurance expense is the payment for the cover in case something goes bad. Now something went wrong. Someone stole stock. Now I can claim back and get an income to cover my loss. So it's two completely different things. Okay? Be very careful there. Then the next one, physical stock taking. So it just means that we've done our stock taking, and we now have to compare the stock take with the balance on our trial balance. So now we need to first just look at it, and then the consumable stores is 320 Rand left over or unused. So that is what our expense is too much with. I must just minus it off my expense and add it to my consumables on hand account. So the balance for trading stock currently is 178,400, but I must take into account the previous adjustment, okay, of the stolen stock that I need to minus off. So on my books, therefore, I now have 171,700 Rand compared to, okay, the stock count of 169,800. So there's a difference, okay? We have less or counted less than what was recorded. Therefore, that will be a deficit of 1,900 Rand. So the difference is the deficit. So part A, I'm going to debit trading stock deficit with 1,900 Rand and minus trading stock 1,900 Rand in order to get a new final balance or book value the same as my stock count. Okay, and then consumable stores on hand is the 320 Rand that I have counted physically in my hands, and therefore I must minus it off my expense because my expense, it's unused, and expenses records usage. Then adjustment number 9, interest is added to the loan or capitalized. So if it's added to the loan, you must know it's capitalized. They will not always tell you in brackets capitalized. They can say it is interest on loan is added to the loan, or interest is capitalized, and you need to know what that means. It just means that we don't pay the loan interest every month. We add it to the capital and then pay it off eventually when the term of the loan has come to an end. So on the 1st of November, the beginning of the financial year, the loan balance was 630,000 Rand. Great stuff, good to know. It should be the same as the pre-adjustment trial balance amount. The loan repayments were made, okay, and recorded during the year, and the total interest on the loan is 91,500 Rand as per the loan statement. So I do not need to record or calculate anything because the bank or the loan institution sent me a statement telling me this is what you owe for interest, or that was interest recorded for the year on their side. So I just need to record it in my books. So adjustment entries must be made for this. In other words, we haven't recorded it yet. So all calculation is needed. Use the amount given to you. Okay, and we add it to the loan. So we're going to debit interest on loan, and we're going to credit loan. Okay, and adding it to the loan, 91,500 Rand. Then adjustment number 10, they say a further 1,200 Rand is still due on the interest on fixed deposit. And according to the fixed deposit statement, so yet again, they've told me that they should still pay me 1,200 Rand. It's not reinvested, and I just didn't probably the statement is on the 25th and they pay out on the 30th. So it's just a recording I have to make in my books. Okay, so no calculation is needed. They give me the amount still due. So it's an accrued income. It's an accrued income because it's not reinvested. If it was reinvested, I would have put their fixed deposit. But it's not. It's payable to me. So payable, still receivable, accrued, in other words, income, debited, and interest on fixed deposit, credited. And then number 11, commission income of 350 was received in advance. So this is income received in advance or deferred income. Okay, same thing. I just prefer deferred income. It's shorter, less to write, quicker, saves you a bit of time. Okay, I'm going to debit commission income, minusing it off my income because it's for next year. It's not this year's income. It's deferred. And I'm going to credit income received in advance. Okay. And then number 12, business funds were used to pay the cell phone account of the owner's wife and entered as part of the telephone expense. Business funds for owner's wife. Okay, so this should be drawings. It's not the business telephone expense. So draw your T accounts. It was recorded as an expense for the business under telephone, which is wrong. It should have been drawings. So I must take it away from telephone and put it into drawings. So increasing drawings but minusing equity, no? So therefore the entry is debiting drawings, which is the expense plusing, or minusing equity. Okay, same thing. And then minusing it off the telephone expense, recording it as a credit there. And that, almost the last one, number 13, the water and electricity was received on the 28th of October, but it was not yet paid. So because it's not yet paid, it's an accrued expense. So I just need to add it to my expense, so debiting water and electricity and crediting accrued expenses. And then we have depreciation. Provide depreciation as follows: on vehicles 20% on cost and equipment 15% on the book value. So if we look at the calculation for vehicles first, on cost means my formula is cost price over 1 times rate over 100 times months over 12. And I get the amount from my trial balance, so 220,000, 20% is the rate, so 20 over 100 for the year. They didn't tell me anything else, so I can assume it's for the entire year, and I get 44,000. Then for equipment, we do the same, but it's now diminished balance method, so my formula needs to change. Cost price minus accumulated depreciation over times rate over 100 times months over 12. So 207,000 minus the total accumulated depreciation on equipment of 133,000. And these amounts I find from my pre-adjustment trial balance. Times 15 over 100 times 12 over 12 gives you 11,100. But remember, depreciation is the two together. So it's that one, 44 plus the 11,100. So let's look at it. We debit depreciation with a total, okay, the 44,000 plus the 11,100, and we credit the vehicles one with the accumulated depreciation on vehicles, and we accumulated depreciation on equipment. We match it to the equipment calculation. And just to have a final recap, see everything in front of you. So this is all the adjustments, number 1 to 6, in your completed general journal. If you missed anything, you can just double check it or refer to your memo again. And the same for adjustments number 7 through to 12. And then the last two, number 13 and 14. So guys and girls and ladies and gentlemen, I hope that you are now a bit more confident and that you know what to do with adjustments. In the next video, we will look at the post-adjustment trial balance for the same adjustments. Thank you and goodbye from Mrs. de Mailon.